Hello traders, Gary Wagner here. Just after 10:30 in Honolulu, 3:30 in New York on Wednesday, the 5th day of November 2014, and this is the daily report for gold and silver. If you've ever heard the expression off the charts, we've got that scenario going on today. Most of my studies right now accounted for a move below 1180, but as you can see by a lot of these fib retracements on the 720 minutes, we've got an utter breakdown and a break below 1180. We'll talk about the significance of that throughout the day, but first just to the markets. 1145.14 current print, putting it down roughly 23 plus on the day. Now the low 1137.40, the high 1163.40, and as I said, currently off over $20 at, call it 1145. Also showing a significant break in silver as it breaks down, currently trading off about 67 cents, 4% on the day, double the sell-off in terms of percentage drawdown that we're seeing in gold. Currently at 1535, low 1513, high 1585. More on silver in a little bit. So traders, how significant is this break below 1180? You can see a hard break, currently trading at 1144. We will be sending out a special trade alert to lower our stops. We're short at 1208, of course. I'm going to be putting it above the high of the last 3 days, which is roughly 1170 on the charts. We'll talk about that in a little bit. But as you can see right here, let me try to go ahead and blow this up. This is the first time in almost 4 years that we have seen gold trade below this price point. Last time really was around 2010. Absolutely, on a technical basis, a real significant move to the downside. Now, one of the questions that we get is, if we have seen this break now, which we have, where could we anticipate this market going to? Now, there's a couple of different studies that have given me some sort of a model to work with. One uses Fibonacci retracement. The other one is basically Elliott wave, and comparing this, which I believe is a fifth wave down, to the first wave down. And in fact, I got an email this morning from one of our subscribers who wanted me to take a look at that, and I think that that's a relevant and a good idea. So let's go ahead and do that right now. So what I've done is I've pulled up, this is our 2-week chart, and on this 2-week chart, my sense is that we are in a major fourth, which could be, but we also have some significance in that we've gone into a bear market. And within that bear market, I really think that in terms of our count that we've seen, it's been something like our first wave here, a wave 1, 2, our long wave 3, wave 4, and then I believe we're now in wave 5. Now, if we take the basic tenet that wave 5 and wave 1 should be at about an equal distance, meaning the sell-off we see in wave 1, and that's what I have here, is a scalable line. And if I take that into this particular top here, this is the highest that we get at around wave 4. It takes us down to this point here, which takes us down to about 985. 985 would be the lows based upon the fact that wave 1 and wave 5 are about equal. Now, is there anything else out there that shows us that that particular price point, meaning call it around 1,000 to 990, is a significant point? And in fact, we do find a couple of different fib retracements actually reaching that point. So in terms of one plausible model, the model that we just looked at, we could look at over the next few months $1,000 gold. But before we get there, I'm not that bearish, and I don't believe we'll see that market move there. And I could absolutely be wrong, but we've got a lot of areas before that. This 50% retracement at 1102, I believe that's going to be very, very significant. We've already seen the market go to 1137 on an intraday low, but we'll see if the market continues down how that reacts. We do have a series of retracements right at around 990 to 1,000. and that's a much shorter term retracement, but I think that's a very appropriate retracement because even though it's short term, it is short term on this very long term chart, and it covers the rise up from about 700 to 1900, and then the subsequent drop to 990 would be a 76% retracement of that particular move. So that's also a really important area to look at. So first, let's see how this market reacts. Is it going to get to 1100? Is it going to break 1100? If it does, we have a couple of areas we can look for. But in terms of one basic model, in terms of the absolute lowest I could see this market go, we could in fact see this market trade to 990 to 1100 based upon these studies here. So traders, we could in fact be looking at the absolute low in gold. I doubt that. I don't believe that that will be the case, obviously. But it's all based, or it's highly based, I should say, on what's going to happen in the dollar. You can see the dollar today overcame any kind of weakness yesterday, has exceeded that. It's at a new high. I don't know if we're at a 4 or 5 year high, but we are at a new high. That's the first thing. Even more impressive than that is the Standard & Poor's 500. This is the E-mini 500, sitting right now at 2018. Yeah, 2018. Former high on this, I believe, was about 2010. That's right in here. So it hits us 2010. We get a 38% retracement. Market comes down and steamrolls back up and is now trading in new territory. With that in mind, my sense is, as I've said on multiple occasions lately, as long as we are looking at a equities markets that continues to rise and a strong dollar, we can expect continued weakness in gold and silver. So traders, what about short term? We've really been talking about long term throughout most of this show today. And in terms of a different type of move, meaning a short-term move, where could we expect this market possibly to go to before we get some kind of bounce? And I draw your attention to this chart. Here we're looking at not only fib extensions, which take us up to here. We're looking at different waves and then extending them forward. But we do have a 61% retracement. And on this particular chart, it comes in at roughly, call it 1129, very, very close to that low of 1137 that we saw this morning right in here. So this is, of course, that first place. And then the 76, that's what we looked at as a possibility in terms of a major bottom. That's at around on this chart at 957. It really depends on whether I start my retracements from the low or from the body, and I tend to do it in both places on different occasions. In terms of a scientific method, it's not all that scientific, but I do, depending on the extreme lows. In other words, if we've got an extreme low, I look at the bodies. If the tails are fairly close to the bodies, I'll tend to go with the tails. In terms of where I place my highs and lows, or where I place start and end points on retracements. But we are right at this point, and of course, we have absolutely broken through this triple bottom. That's what's key. And so because of that, I do expect lower pricing. We're certainly getting that on today's market, and this market does continue to trade under pressure. And then finally, silver. Talk about off the charts. Major move, 4% lower in silver today. As you know, I talked about the fact that if we saw continued weakness in gold, we'd see it in silver. I expected silver to go to the low 15s to 15. And traders, we're almost there. I really didn't expect it this quick, but nonetheless, this is what we are currently looking at. Maintain your current short position. I will send out a trade alert. You are going to be recommended to trail your stop down and to protect profits that we have on our current trade. This has been Gary Wagner, wishing you, as always, good trading. We're certainly getting that this week. We'll talk to you tomorrow for another daily update and review. Bye-bye.